Thanks everybody for being here, and thanks for the panel. We have an awesome group of guys. So I'm just going to kick it off. I know we made the introductions, but I also would like to give you guys a couple of minutes to give maybe currently what you're doing and some of the highlights from your previous roles, and then I'll kick it off with a couple of questions.
All right. So I'm Gonzalo Juarez. I'm the CEO of ETIPS. We are the largest publisher of mobile travel guides. If you go to the app stores, if you search for the city of San Francisco, we should be the first app appearing over there. If you search for any major destination in the world, we have an app for that within top 5 results. I bootstrapped the company. I moved to Silicon Valley 4 years ago with one objective, to raise money. Then I arrived, I decided not to raise, and I'm still here.
So you bootstrapped?
I bootstrapped,
That's
yes.
good.
Okay. Yeah.
Yeah, I'm Curt, and I have over 20 years experience of building and operationalizing agencies. So I come from the agency side. And then 5 years ago, I started my own consultancy. And then 2 years ago, I started Vertuoso, which is a content and marketing production company. And so I have a lot of experience of when to build, when to hire, when to fire, when to how to maximize profitability and all that stuff. So,
my name is Sanjit. I'm the co-founder and chairman of UFirst Capital, which is a venture capital fund. I have been in the venture capital sector for over 15 years now. I've been in Silicon Valley for 20 years. Prior to creating UFirst Capital, I used to be at Intel Capital, where I led investments in several sectors for consumer, mobile, and enterprise. I'm always a fan of entrepreneurs who want to bootstrap as much as they can, but I always feel that they need to be cognizant of the trajectory that the funding can drive for them, because raising money does help you turbocharge the trajectory that you could do yourself.
Awesome, thank you. Yeah, and myself, I've been in gaming and building digital platforms for about 13 years. Worked at Zynga, Machine Zone, FunPlus, Tops, currently COO at ETIPS Digital Collectibles, and I also am an advisor at Bitcraft Esports Ventures, doing strategy, product development, performance marketing, and operations consultant. Yeah, so for my first question, you've obviously started a lot of companies or interacted with a lot of new startups. What are some of the key things to focus on in terms of departments when you kick off a company? I know you have to have a product or a deck, and especially when you're presenting to the VCs. But what are some of the key things that you need to pay attention when you're bootstrapping your company and making sure that these are my core values, and I'm going to keep these functions in-house?
So for us, it's an app company, so we decided to have an MVP, minimal viable product, in the market as soon as possible. That was a key thing for us. Once we saw some traction, we could actually scale. But there's not right or wrong here. It's really what works for you. For us was working on MVP, putting into the market, seeing some traction, and then scale it. I always suggest to do something like that. Even if it's an app or if it's hardware, make the product, get some market fit, some market traction as soon as possible, and then think about scaling.
Cool, thank you.
yeah, obviously your product team's the most important because you want to end up with that MVP. But beyond that, what's forgotten a lot about is branding, right? That doesn't have to be brought in-house. You can hire an agency to do that or a consultant. So that's important. And then comes marketing, right? So again, if you're advertising or marketing, a lot of that can be outsourced as well, but who's running that? You may not have a CMO yet, but you might have a brand manager, let's say. So you want to stay lean and small and grow smart and outsource experts, right? You don't necessarily have to hire them full time. You want to be careful with your burn rate, and so it's a matter of knowing when to bring those resources in-house versus outsourcing with experts out in the field.
Okay, perfect. Sanjit, I'll maybe recraft the question for you a little bit, if you don't mind. So, when you see a company that is bootstrap and they come in to a meeting with you with, let's say, 10 to 15 slides and some sort of a financial model, what are the first three things that you look at? I know it probably is not the profitability. If they're profitable, that's awesome. But could you give us some insights on how do you evaluate?
Yeah, so, first thing I do from a tactical standpoint, purely from a tactical standpoint, is after slide 3 or 4, I shut down the projector. Because I'm more interested in understanding what is in the mind of the entrepreneur versus looking at beautiful slides that were created by somebody else for the CEO. A lot of people can do good presentations, make good presentations and present them really well, but that's not what I'm interested in. So I'm more interested in the mind of the entrepreneur. So after first 3 or 4 slides, if it sounds interesting, I shut down the projector and start doing a whiteboard session with the entrepreneur. And that gives me a better sense of how clear the entrepreneur is in terms of the idea that they have been going after and why now. Because if you, as an entrepreneur, do not have the clarity for those questions, and you cannot articulate those well to me as an investor, you cannot articulate those to your customers or future employees, etc., etc. So that is one tactic I follow. And the themes, the pieces that I'm looking for are, number one, how strong is the team? What market are you going after? Why now? A lot of companies go after markets either a little too ahead of time or a little too late. And the reality of being a small app company, as an example, is you have a finite window of opportunity of survival. There's a valley of death coming for you. So if you can't raise funding either from customers or from investors in that time frame, the company dies typically. So you have to be able to explain why now, in addition to the standard metrics of team, product, and here is my traction, etc., etc.
Yeah, so I 100% agree. So it's, I've gotten the chance to kind of interact with a lot of, good investors and sizable investors, and most of them usually make their decisions within the first 10 minutes, right? And they call themselves emotional investors versus
it is
financial investors, because they need to believe in the entrepreneur themselves and himself or herself. And then, and most of them also did a couple of quite strange things to kind of throw the presentation into a limbo in a way, and then kind of put the CEO in a tough position to come out from, and really watch them how to dig themselves out of that situation. And so there's a lot of things that they look for beyond profitability, and I agree with you. There's feedback around team, what their previous experience is, and then there's some that looked at the financial models and gave feedback, but that usually came after the meeting in an email or some sort. So. Thank you for those answers. And my next question is, so, let's say that, you're not running out of money, but your company is bootstrap. When is a good time to take on investment? Like how do you guys look at that process? Whether you're profitable or not, let's say you're not profitable, and let's say you are profitable, if you can give me 2 answers. When is a good time to, obviously, before you run out of money, is, let's hope that that's not the answer, but yeah. So, what do you think? What do you think about that?
Yeah, that's a good question actually, because when I first arrived to Silicon Valley, I've been told that every time you are raising, every single time you're raising, which in fact is kind of true, but we decided to do it the other way around. I first arrived here with the objective to raise money. Then I found out my company was one of the few healthy, profitable ones. So I decided not to raise and then I decided to start building smart alliances across the industry. And that's what we did until last year that we decided, we changed the business model, and we said we need the financial capital for that inflection point. You do need the financial capital for the inflection point. However, it's really up to the founder if you are going to build a lifestyle business or a business that you want to scale. So for us, we've been in the App Store for a while, and we always had traction. So money wasn't an issue for us at the beginning until we decided to scale fast. So if you have market fit, and if you have a plan, and if you want to raise money, you should definitely do it at that time. Of course, you put yourself in a very good situation if you do not need the capital right away, because it gives you leverage to negotiate with the VCs or angels.
Thank you.
Yeah, I want to say it really starts with the founders. I have a co-founder, Greg, in New York, and if you have complementary skill sets, you can do a lot without finding that investment during your first 2 years or at our end of our second year. And so we've outsourced everything and kept our overhead low. So the decision when to find investors is when you reach an inflection point where you can have the opportunity to scale, but the founders can no longer do that work that they've been doing. My partner is a producer and an editor and operations guy. I'm, creative director, designer, marketing guy. So it's complementary, and we can work on separate paths, but at some point, we're going to get to the point where we have proven our model and want to scale, and our IP is actually the content that we create. So we would be looking for that investment from a content creation perspective.
Cool.
The best time for fundraising is when you don't need the money. Because if you are getting to a point when you are running out of cash, that's the worst time to raise money. You will definitely get killed in terms of valuation you get if you are able to raise funding, and the terms, etc., won't be favorable most likely. I always tell entrepreneurs, if you go to an investor looking for funding, you will get advice. If you go to an investor looking for advice, you will get funding. Do not go out looking for money. That's like begging. Nobody gives you money. Go out and say, I'm building this, $1 billion app company. I already am on a trajectory. I have a lot of interest from investors, partners, etc. I just want your advice. How can I go 10x? What else do I do? Can you introduce me to 2 other partners? Focus on those things. Look for that advice, and then they will say, oh, wait a minute, I want to invest. So you have to turn the tables. Go to an investor from a position of strength. If you go to an investor looking for funding, you don't get funding. 1% of the companies in Silicon Valley get funded, 1%. Probably getting even lower because the number of startups has just exploded thanks to the cloud. And there are a lot of entrepreneurs pouring into Silicon Valley. So the percentage will get down to 0.1% in the next few years. And investors have 20 other pitches to look at after your pitch. You get their attention only for a few minutes, sometimes for a few seconds. I tell my companies, the CEOs, be ready with your 15-second pitch for advice. Doesn't have to be for funding. So that's the approach entrepreneurs need to take. So stop regarding investors as God. They are not. Turn the tables around.
Yeah, completely agree. I think for me also, it depends on what round in a way, because if you're raising a safe round, a seed round, I think since there are most likely there's not going to be any numbers, right? So you cannot really show growth in a way other than the product. So you can say, okay, 6 months ago there was no product, and I hired these 3 guys with the seed money, and I did ABC, and here's a prototype. But I think if you're doing a financing round, there's no reason to raise unless you're accelerating your growth, right? And in a profitable way. So there's a lot of especially on the cash round, let's say A round. There's a lot of considerations comes into place. How is your LTVs? How is your eCPIs? With this $5 million I will give you, or whatever X amount of dollars I will give you, what is the expected top line? So, and then what's going to be your EBITDA, your profit margin? So I think it depends on the round, but I think if it's a down round or a round with bad news, I would suggest not to raise at that point and still continue maybe on the bootstrap side of things and see if you can actually release maybe more aggressive product features versus incremental changes to your product. Thank you for those answers. So my last question, and then I will open it up for questions from the audience. So let's say you passed bootstrapping and you raised your first round, whether it's seed round or the A round. What are some of the departments or the teams that you would like to keep internal versus either offshoring or keep it external? Meaning, obviously you want to keep your tech stack in-house, and is it the marketing team? Is it the branding team? Is it the analytics team? So could you guys give me some insights on that?
So in my company, we have this small team. We call it kind of a commando team. The ones that are touching the back end, the ones that are doing the plug and play from coding. Those guys, you should keep them in-house. Then for marketing, we haven't done a lot of marketing so far. We have a lot of downloads, but marketing in the App Store, it can be huge. It can go from Facebook, Instagram to search ads. So over there, you can leverage on outsourcing. I'm lucky because I know the commercial piece of the business. So I know when we outsource, I'm the one receiving all the feedback from marketing, from the marketing side. But then, I would say have a strong technical team in-house, and then the rest you could actually bootstrap. Okay. You could actually outsource.
Okay, thank you.
Yeah, I point to leadership. I think having those leaders with a great pedigree that adds to the story that investors like, and whether you outsource or build teams around those leaders would be their decision at that point. And so I think that's kind of a natural progression based on, expertise. The other thing I want to say is that we live in an age of digital nomads. There's 3.5 million workers out there who want to be freelance, don't want to go in-house, don't want to be hired, but they're seasoned people, all experts, directly relevant to, this type of business. And I also say 30% of those people are over 50. And so you have senior people out there in the world acting as digital nomads who don't want to go in-house, but they're senior people that you can access. And I think that's, an increasingly exciting portion of the community to tap into.
Cool, thank you.
Your company is running on 3 pillars: people, technology, and branding. So when you think about which parts of my team I can outsource, you have to start thinking about along the lines of those 3 pillars. For people, you have to decide, hey, my engineering talent, for example, do I keep the data scientist in-house? Do I keep the AI talent? Do I keep my core app developers in-house? Rest of it, maybe the support functions, can be outsourced. Technology, tomorrow if you get an acquisition offer, they're going to look at your product and the technology that you've built and the team that has built that. Most acquisitions happen more for the team than for your product and traction. So you have to make sure you keep that talent in-house. Then comes to branding and how do you drive that branding, how you are driving that branding in the marketplace for yourself. You should, I always suggest startups or app developers in general to look at, there is a sales learning curve article written a few years ago by Mark Leslie. He was the CEO of one of the successful companies in Bay Area. And he talks about when to hire and fire the sales people versus marketing people. It's an HBS article, you can Google it. And similar to Moore's Law, he talks about, hey, there is an inflection point. when do you hire? Is it too early to hire sales team at seed stage? Is it too late at Series B? So you have to really keep that balance and keep your top sales team in-house. And then you can grow via partnership, some outsourcing, etc. But you really have to start looking at, hey, what is this company running on? And it doesn't matter you are a small company of 10 people or getting to 100,000 people. There are always a handful of pivotal people that the company is running on. Just a handful. The rest are following those 4 or 5 people. So you have to identify those 5 stars and make sure they stay within the company. Because if they leave, there's a group of people that leaves with them.
Thank you for those answers.